In this video, I'm going to talk about what Islamic finance is and how the traditional investments are not halal, and how, as a Muslim in North America, you can invest in the stock market in a halal way. Hi, my name is Ahmed Mahian. I am a personal finance expert here in Canada and the US. Islamic finance follow the Sharia rules, which dictates how we should invest our money. So in the world right now, the Islamic finance economy is around $2 trillion, and it is expected to grow at 15 to 20% over the next few years. As the population of the Muslim around the world goes up from 1.8 billion people to 3 billion in the next 40 years, obviously the Islamic finance sectors will grow over time. Now, the way an investment is categorized as haram depends on few factors. The first factor is whether the investment is based on interest. Usually, the Arabic term is riba. What means if we are lending money and charging interest, then this transaction is not halal. Now, there are arguments against this concept because the historical context for riba is a little bit different that we have right now. Back in the days, we didn't have banking system. So the way people were lending money was a lot of wealthy individuals had lots of money and they were lending at a very high rate of interest. So there are few academics and there are scholars who disagree with the definition of riba, but majority of the Sharia scholars have given their verdict that if the transaction involves any type of interest, then the transaction is not halal. The next criteria to make transaction haram or halal is obviously if the transaction is involved in a prohibited activity, such as, let's say, stealing money. So obviously that transaction is going to be haram. The third criteria which makes the transaction haram is obviously gambling. So in Islam, gambling is prohibited. And the fourth criteria is any type of deception. So when there is a transaction, both parties should know exactly what the products are, what the features are, and there shouldn't be any ambiguity in that product. So whoever is buying, has to be provided enough information to make proper judgment. Obviously, the seller, if somebody knows there is a problem, but he or she didn't disclose, then there will be a problem. But as long as full disclosure is given and the buyers knows all the features, then the transaction will be halal. So these are the four factors that determines whether the transaction is halal or haram. Now, where does these rules come from? Obviously, the first sources is the Quran. In Quran, in the Surah Baqarah, there was verses that prohibits that do not commit usury. Then the second is Sunnah. In many hadith, it was mentioned that we should not involve in any type of riba. The third is the scholarly consensus. Our Sharia boards these days or different Islamic council will be also a source of these Islamic finance rules. Then we have the qiyas or analogy, and finally istihad, which is independent reasoning. So if something is found in Quran, then Quran trumps everybody else. If it's not found in Quran or it's not found in Sunnah, then obviously Ijma is going to take place. Over the last 20 years, the Muslim in Canada has been growing rapidly. And as per the latest consensus, in 2019, the Muslim population was over 1 million, and it is expected to grow at 4 or 5% every year. This population is mostly concentrated in the Greater Toronto area and Montreal. In Canada, the number one pain point that Muslims have is getting a mortgage. So as we live in the West, there is no Islamic bank. All the conventional banks offer their conventional mortgage, which by definition is not halal. Obviously, the Muslims in Canada don't have too many options for Islamic mortgages. The second pain point that most Muslims have is not having enough investment options. Most of the investment options are offered by the big banks, and none of the big banks have halal investment options. And the third pain point, again, most of the banking products in Canada, for example, checking account, savings account, credit card, a lot of them have interest, which makes this product haram. As of 2023, we don't have any Islamic bank. The fourth pain point that most Muslims have is lack of expert knowledge in Islamic finance. We have lots of scholars who are trained in other areas, but there are very few scholars who understand both the traditional and the Islamic finance. And then the last one is fraudster. It's very easy to trick people with their religion. Now let's take a look at some of the difference between the conventional banking and Islamic finance. So in Islamic finance, we have the interest-free banking system where you do not pay any interest for any of the product, but typically the way the Islamic banks makes money is by charging directly through different types of administration fee. Whereas conventional banking, they typically make money on lending loans or mortgages or charging interest on different banking product. The second difference between conventional banking and Islamic banking is in the traditional conventional banking, you have savings products such as savings account or GIC, mutual funds, stocks, bonds. So most of them are not halal, but in Islamic finance, these investment has to go through the screening process, and I'm going to talk about that in a few minutes. So a screening process will filter out all the haram stocks, and obviously in Islamic finance there is no interest-based product, so you cannot invest in GIC or savings account. Now in the conventional side, you have different types of insurance: life insurance, auto insurance, business insurance. In the Islamic side, the insurance is called takaful. So basically the concepts are similar, but the way the premium is invested, which keeps the takaful insurance halal. Then the traditional economy is based on a taxation. In Islamic finance context, there is no tax on personal income, but there is a wealth-based taxation through zakat. Then a lot of the charity that is done, mostly they're done for tax purposes, because whatever you donate to a charity, you get a tax credit for that, which you can apply against your income tax. Obviously, some people are philanthropic when they give money to other people, but in Islamic context, all the charity that we do is to please Allah. We don't get any tax credit for that, but we still give zakat. So this is the main difference. Let's take a look at how investment is screened. So what makes an investment halal or haram? There are two ways we can screen for halal investment. The first one is qualitatively, and the second one is quantitatively. Once an investment passes both of these tests, then we get the Sharia-compliant investment. So let's take a look at the qualitative screening. To qualify as a halal investment, the business has to be in a halal sector. For example, alcohol and tobacco, these are prohibited sectors. You cannot invest any of your money in a company or stock that is in this sector. Then we have conventional interest-bearing businesses such as big banks, insurance company. We cannot invest in the gambling companies, adult entertainment, pork company that is involved in any type of alteration of human body. These types of companies we cannot invest. And obviously weaponry and other unethical businesses. These are the qualitative screening. Portfolio manager typically exclude all the companies that are in a certain sector. Second, we apply the quantitative measure. Right now, AOFI, the Accounting and Audit Organization for Islamic Financial Institutions, gives us the rule. There are a few major index providers that are already doing the math for us. Each calculation are slightly different, but any of these are accepted as a Muslim. So what are the AOFI guidelines? So to understand that, first we have to understand what market capitalization is. Market capitalization is how much a company worth in a market-based economy. So if I take Apple, right now, middle of 2023, the market capitalization for Apple, let's say it's a $2 trillion market cap. So its interest-based debt cannot be more than $600 billion. The second criteria it has is Apple cannot invest in short-term investment which gives interest. So it cannot have more than $600 billion in savings account or a treasury bill or other type of interest-bearing investment. And the third criteria is the company cannot earn more than 5% of its total income in a haram activities. For example, let's say Walmart sells all kind of product, and some of the product it sells, for example, tobacco. If the income from tobacco or alcohol is more than 5% of its total income, then we cannot invest in Walmart. So as long as it's under 5%, then we are good. We can still invest. Now, these numbers are subjective. There is no reference from Quran or Hadith for these numbers. So these numbers are all based on the agreement of the Sharia scholars. So if the Sharia scholars 20 years down the road thinks that 25% of the market capitalization will make more sense, these numbers can change. Now, we already established that some of its income from an investment will not be halal. So there will be always a portion of the business income which is haram. And since we can't invest in haram way, we have to do some sort of purification. Anytime you invest in any types of investment products, especially the large ETFs that most Muslims invest, they typically give you an impurity ratio. So this is a estimation that these fund companies do, and they are expecting that out of the 100,000 of your investment, there will be a portion of that 100,000 which is impure. So the ETF company will give you that ratio, and most scholars have said that in order to purify your investment, you should just give away whatever the impurity ratio to a charity. Now, how do you buy Sharia-compliant investment in Canada? There are two ways you can buy. The first one is through discount brokerage, and the second one is advisor channel. As you know, Wealthsimple Trade, RBC Direct Investing, CIBC Investors Edge, Questrade, TD Direct Investing, Interactive Broker, these are all discount brokerage. So what that means is you are fully responsible for your investment decision. You open up the account, you put money in, and you buy whatever you want. Nobody is going to give you any advice, but you build your own portfolio. There are some fees to buy and sell these investments. These are called transaction costs. Some of the platform that I listed here are free. For example, Wealthsimple Trade is free for the Canadian stuff, and Questrade, you can buy ETF for free, but when you sell it, you have to pay $4.95 fee. Other bank discount brokerage typically charge anywhere from $5 to $10 per trade. On the other hand, if you go with the advisor channel, there are typically two types of advisor available in Canada. The number one is financial advisor. Typically, the advisors are mutual fund licensed, so they can only sell mutual fund. So these are advisors don't handle bigger accounts. Account size, let's say less than 50,000 or 100,000. They are not typically licensed to build a portfolio with ETF. The second group of advisors are investment advisor or portfolio manager. They typically handle larger account size. So normally a portfolio manager typically do not take any client less than $500,000 to $1 million. And they can build portfolio with halal ETF. And if your account size is large enough, some of the portfolio managers can also build the portfolio with individual stocks. Most of the portfolio manager or investment advisor will do some sort of financial planning. So they will look at your retirement plan. They will do some sort of tax planning. Whereas the financial advisor, which are mutual fund licensed, they typically are not as capable as the investment advisors or portfolio managers. That's just a nitty-gritty of who you work with and how they get compensated. Now, let's take a look at some options under the discount brokerage side. So the first one is the Wealthsimple Sharia World Equity Index ETF. The ticker is WSHR. So the ETF market cap was 114 million as of June last year. The management expense ratio is the expense that you have to pay to the ETF companies. Well, simple is charging half a percentage point for your investment. And all ETF has some sort of fee. ETFs that are provided through larger institutions like Vanguard, iShare, their MER are typically very low, but again, we are talking about Islamic product. We all know halal product cost more. It's not just the investment. Even if you go for grocery, halal meat cost more than the normal meat. The expense ratio is 0.5% annually. Well, simple Sharia World Equity Index is following the Dow Jones Islamic Market Index. And it is denominated in Canadian dollar, which is a very plus point for Canadians. And this is a passive investment strategy. One of the risk factors, as you cannot invest in the bond, your portfolio has to be 100% stock portfolio. So when the market goes up and down, it is going to go up and down quite significantly. Most of the company that these ETF invest are outside of Canada. And anything outside of Canada has a foreign currency risk. So the second option that I'm going to look at is Wahid FTSE USA Sharia ETF, ticker symbol HLAL. This is also $156 million as of last year, same MER. And this is also following the FTSE Sharia USA index. And this ETF is actually in US dollar currency. So you have to convert your money to US dollar before you purchase. One of the concerning factor for this product is because it's following the Sharia USA index, it has high concentration in Apple stock. If you're building a portfolio, make sure you understand that. In the halal investment world, Sharia portfolio ETFs are a major player. So Sharia portfolio has been in the US for quite some times, and they have 3 ETFs, which are by far the largest 3 ETFs that Muslims use. So their SPUS is basically a stock portfolio that follows the S&P 500 index. It excludes the company that does not qualify under the Sharia guidelines. It excludes almost 300 stocks from the 500 companies, and it invests in the filtered 200 companies. Then we have the SPSK, which is the Sukuk one. Sukuk is the Islamic bond, and majority of its money is in Middle East. So companies that follows the Islamic guideline, it has a significant investment in those companies. And the third ETF that they have is SPRE, which is a global REIT. So again, this ETF invests a lot of money in Dubai, Saudis, and that Middle East area where the mortgages are halal. So that makes this product Sharia compliant. Now, all of these are in the US, and their fees are roughly around 0.5 to 0.67%. It is US denominated, so you have to convert your money to US dollar, and it is a passive strategy and significant currency risk that you have to take. Since it's following the S&P 500 company, as we know, S&P 500 has a problem where few companies like Apple, Microsoft, Amazon, they control majority of the indices. This SPUS has the same problem that 20% of its underlying holding is basically in 2 companies, Apple and Microsoft. There is a global Iman fund that has been in the Canadian marketplace for a while, but they had some lawsuit issues in the last few years. Their MER is very expensive, 2.8%. Anything over 2% is very expensive. You will receive some sort of financial advice, but typically the people who sells these mutual funds, they're not going to do your tax planning or your retirement planning. They may do a basic financial plan, but not as detailed as some of the other portfolio managers or investment advisors. They follow the Islamic Market Titan 100 index, and they are Canadian dollar denominated, which is a good thing. And they have been the oldest options since 2009. And this is an active portfolio. That means somebody is following the market and making investment decision. And again, this is a 100% stock portfolio, and significant portion of its investments are outside of Canada. So it has foreign currency risk like the other ETFs that we examined so far. Now, there is a new fintech company called Munzil that came into the Canadian marketplace. They are trying to introduced some new technology and some investment option for Muslims. They have an investment options where they charge 0.6% per year for their investment management service. This is the fee that you have to pay for their service. This covered the cost of their technology fee, their custody fee, stuff like that. This is very similar to the Wealthsimple. Wealthsimple, I think they charge 0.5%. Manzil is charging 0.6% every year for advisory fee. And then there is some management expense fee for the ETF itself. So it can range from anywhere 0.5% to 1.49%. So Manzil uses a different ETF to build your portfolio. Two of their ETF are their own product line. As you can see, One West Halal Equity Fund has a 0.5% MER. So this is a new fund. That's why I have put some notes here. It was launched a few months ago. So this is an estimated MER, but their mortgage fund, which is launched, I guess, a couple of years ago, it has 1.49 MER. So when you add these together, you can see that the total cost can range from anywhere from 1.1 to 2.49%. Manzil also use SPRE and SPSK, and they also use the Wahid fund. They use physical precious metal ETF. You will not get any financial planning advice from Manzil because it's a mostly algorithm based. It's very similar to the Wealthsimple model where you just answer a few questions and they will put you either high risk, low risk, or conservative risk, and then they will just invest your money in those funds. You will not get any tax advice. You will not get any financial planning advice. So this option is good for people who are, just starting out and you want to invest in a halal way, but you don't have that much assets. Your finances are not that complicated. You will be better served with Manzil. But once your investment goes to, let's say, 100,000 or 200,000, 300,000, or even million, you will be better served with a portfolio manager or investment advisor, because when you compare this cost, the cost for a portfolio manager is typically anywhere from 1% to 1.5%. And if you add another 0.5%, 0.6% for the ETF cost, you will get all-in cost anywhere from 1.5 to 2% range for a portfolio manager. But portfolio manager will give you tax advice, retirement planning, stuff like those, which could be very valuable for people who have significant wealth and they need financial advice. Now, the last things to watch for as a Muslim is you have to have your will and power of attorney in Canada. As you know, Canada is a secular country. It does not follow the Islamic law. So unless you are creating your own Islamic will, it is going to follow the Canadian rules. So Canadian rules are common law rule. If you are living outside of Quebec, it's just going to follow the provincial rule. The second things to watch for is there is no Islamic insurance at this point, but hopefully in the next few years, as Muslims population grows in Canada, hopefully we will see some sort of takaful or Islamic insurance options. Then you can invest in gold to generate your wealth. However, gold is typically not a very good long-term investment. Certainly, gold has performed very well when the market is in distress. People typically sell their stock and go to gold, but in a long period of time, it has underperformed the stock market for a significant long time. It did perform very well in the 70s or 80s, but did very poorly when the stock market goes up. So that's something to watch for. And know how to calculate your zakat. There are some great tools out there. There are some books available online on Amazon that you can use to calculate your zakat. I am just going to say about this one. I use this one to calculate my zakat. I have no affiliation with them, but I find it very helpful. And if you are not 100% sure, check out my other video where I share how to calculate the zakat in the Canadian context. I hope that the mortgage industry will come up with some sort of solution for Muslim population as the demand of Islamic mortgage or halal mortgage goes up. So that's all I have for today. If you like this video, please share with your friends and family. click the subscribe button, click the like button so that YouTube can show this video to more people like you. And if you enjoy this kind of video, follow my channel so that you do not miss out on any future video.